Alright, what's going on, guys? Hope you're doing well. In this video we will be talking about the Fib retracement tool. So it looks like this on TradingView. It's called Fib retracement. Now I highly suggest that you put that tool in your toolbar favorite, simply because it will be a tool that we will be using basically 100% of the time. Alright, so once you place your fib, it will most likely not look like this. You'll have a bunch of colors and a bunch of levels that you don't want. So now I will leave a screenshot of my settings just under the video. So you have to copy those exact levels, and then if you don't want those dumb colors, then just turn that background off. So that's pretty basic. All right. Now, how do you place your fibs? Always from left to right, and then you can either place a fib for a buy or a sell. All right, so if you want a sell fib, well, it has to be from a high to a low. So the fib that you use is the retracement of that downside impulsion. So from the high there to the low there, so from left to right. And then these are retracement levels in percentage of that move down. Now it's the same thing if you want a buy fib. You just have to place the fib from a low to a high, from left to right. So that would be a valid buy fib. Now if you don't know how to place a fib, then go on YouTube, search a video on how to place a fib. I'd say it should already be learned. It's a pretty easy topic, so just go on YouTube. I won't be passing 15 minutes of my time to teach you that, all right? But you'll have a bunch of levels, so this is what I'm gonna be teaching you guys today, all right? So let's start with the 0% and the 100%. These are not levels that we will be trading really, simply because if price go to that 0% right there, well, it's basically a double top, and if it go down to the 100%, well, it's basically a double bottom. The only exception we would be trading those levels are if price move up like this, gives us some type of reaction on that level. So a lot of retail traders are entering the short right there based on a double top, and then we get a liquidity grab right there, so a fake out to the upside, and then we go close the candle, or the next candles go back in under the 0%. You wait for a retracement back to the 0% again, then you can short that level with your stop loss above the wick right there. So sometimes these are the types of trades that works. I call them the what do I call them? I call them the fake out trade. Pretty easy. So yeah, this is the only exception. So if you see that on the 100% or the 0%, you have to wait for a fake out. Since yes, double top or double bottoms are working sometimes, but on the long run, you will lose if you take every one of them. All right. So now let's start with the 38. The 38 will be the first level that the price reaches when placing your fib. This is not the level that will be working most of the time, but it will work the most when it's paired with a break retest. Now, if you don't know what a break retest is, I'll show you a quick example. So let's say we have that upside impulse just like that. Then we get a retracement, so we get a high right there. Then price starts moving back up, so like this, and then we get another downside move like that. All right, so the retest of that high right there, it's called a break and retest, simply because we broke that high and then went and retested. When it's paired with a Fib 38, this is where the odds of a 38 Fib working are the highest. All right, so this is most of the time, this is how we will be using the Fib 38. Now, if the Fib 38 in that case works, there's a lot of odds that the price will go make a new high after it. All right, since it's the first level, there's still a lot of upside volume, so the odds of a new high are pretty high. Now let's talk about the 50% and the 78. We'll do both at the same time since they are pretty similar levels. All right, they are not levels that works the most, but once they are paired with some good confluences, so I'd say about 2 to 3 confluences, they are levels that are great. All right, but they are not wonderful. Now let's talk about the 61, which is the second level we will be using the most. Now the 61 is a well-known level for reversals. All right, so that's why we have the 65 and the 71. All right, because most retail traders are trading this level. Sometimes you'll see some reaction on it, and then a quick dip to the 65 or the 71, and then price moves in the right direction. All right, so yes, the 61 will work most of the times, but you can't neglect those 2 levels below. All right, so sometimes if the level is more clean on the 71, so let's say you got a better key level on the 71, you've got some moving average passing through, then you can take the 71 instead of the 61. So everyone that takes the 61 will get fucked, and then you buy the 71 and you make money. All right, and then we have our holy grail. This is the 88.20. It's a big stop losses of retail traders level, so lots of retails will put their stop losses on the 88. So let's say they buy on the 61, they'll put their stop losses on the 88. Now, lots of institutions know that. So the 88 will be used for swing buys or swing short. The way we trade it is the same as other levels, but this is the only level that you can snipe. So we use that 88% as a zone, so it will be between the 88 and the 100. So if you want to snipe it, you can just be assured that your stop loss is on the 100% and your buy is on the 88.20%. Now the 118%, this is basically the same function as the 88. So a lot of those retail traders that are buying that double top on the 100% will put their stop losses on the 1.18. So most of the time the institutions will target those stop loss levels before getting the real move. So that's pretty much it for those fibs. Now the green levels, they are not levels that we will take a trade on it, but they will be used for take profits level. All right, so the first take profit level will be the minus 27.20, and then the minus 100. Then we got a couple more, but the 2 most important ones are those 2. Now we don't trade those levels because most of the time once price reaches those levels, it will not do something like this. It will most likely do something like this. So now institution will get some type of pattern of distribution on that level, and then maybe go down, or then just simply continue his way up to the next take profit level, which will be the 100%. All right, so if you have some buy swings, so let's say you've bought that 38%, you know that most of the time the 38% goes to another high or another low, then your target for that 38% can be the minus 27.20. All right, so this is the bigger picture of the Fibonacci retracement tool. Now, of course, we'll get into more examples in the live XAU USD updates channel in the Discord, but this is the basics of the Fib.